Yeah, it was so painful. In fact, the term we use is hemorrhaging money. Every day, you know how much you lost, and then you think that I could have bought my mom something with this, right? But now it's burnt. It's not managing time, right? You got 24 hours, 24 hours, the same one, right? It's nothing to manage, right? But it's about the energy and the focus of which we execute some of our duties. How present are we? And then how meaningful is the outcome? Given the funding winter that we are still in now, right? It helps the new operators of tech startups think about the long term, right? We can think of fundraising as financing, but other forms of financing would be debt. Profits is actually a very good way of financing a company. The overwhelming narrative now is about tech startups, and it looks a lot like fundraising announcements, right? If we go back to first principles on a 5-year timeline, right? What kind of lifestyle do I want?
Hi, I'm Eric, host of the Sow and Scale podcast, where we interview entrepreneurs, innovators, and pioneers to tell their unfiltered stories for you to become a better business operator. If you like, please subscribe on YouTube and follow it in your favorite podcasting app, as that would help the podcast tremendously. Today, our guest is Junxian Lee. Junxian is the co-founder and chief product officer of Goodwhale. Junxian has launched 5 startups with co-founding roles in 4 of them, including Shopee, Alta, Shield, Moovaz, and Goodwill. He's an investor in early-stage startups, a venture partner in Iterative, and a startup mentor at Digital Mission Ventures, where I met him and learned a lot from our conversations. He lives in Singapore with his wife and 2 kids. In this conversation, we dive into the early days of Shopee, pivots to find product market fit, how he managed 3 C-suite roles, managing time as a parent, mindsets in a fundraising winter, and how he aligns his faith with business. With that, I bring you Junxian Lee. Thanks for being here on the first episode of the podcast.
Yeah, I'm excited.
Could you tell me about how life was before entering the world of business?
My dad's Malaysian. My mom's Singaporean. In Malaysia, the growing conditions were very different. Right, kampong, plantations, stray dogs, stray chickens. My dad came over and then we started anchoring in Singapore. In junior college, I was like double math, physics, econs. I remember like most of my classmates were guys, right, in junior college. So barely passed promos because like played too much soccer. Very conventional. I had to apply for university, right? Thank God I did okay for my A levels. So that gave me maybe more choice. Yeah, but because I wasn't sure what I wanted to do, and I was quite sure that I wasn't an engineer. So I took a general degree in business. Subsequently, I guess, like specializing more in finance.
I'm aware that during university, before 2008, right?
Yeah.
You started
a thing
called Black Box.
Oh, Black Box, yeah.
And even a cafe.
You've done your homework. Yeah.
Do you mind sharing what Black Box was?
Yeah, no, for sure.
And how you come up with the idea?
That was like actually year 2, Sem 1, I think. Yeah, I study in NUS, right, for my undergrad, and there's this area, the student hostel called PGP, Prince George's Park. Student entrepreneurship was kind of on the rise. They set aside an area in PGP to encourage student entrepreneurs. Ultimately, like a partner and I pulled together some savings and we started Black Box. Black Box was kind of like Play Nation. There were 4 3-meter by 3-meter black rooms that we decked out with PlayStation, Xbox, and Nintendo Wii, that kind. So the hostelites can come during the nights to play with their friends. So the FIFA, that kind of stuff. So that's actually the first business that we ran. Startup capital was maybe, I think it was like my ang pao savings and my army savings, honestly, it was probably about 10,000. Each of us put about 10,000 in. Yeah, and then we did kind of like what all young people do. We tried to like bulk buy from Mustafa. I remember this moment where we were at Mustafa and, the bill was there, right? We did our best with managing the cost, and it's just like sign or don't sign, right? If you sign away, then congratulations, you're an entrepreneur, but there goes your life savings, right?
Yeah.
Or you can don't sign, and then you keep your savings, but maybe wait for a better time. And my partner and I decided to sign it. So actually, that was kind of a marquee moment where I realized that maybe there is that optimist and opportunist in me. You can call it entrepreneurial spirit, but yeah, I realized that, okay, I wouldn't say it's a 1 or 0 kind of thing, but maybe at least 51%, 49%, right? I was a little bit more entrepreneurial than I was conservative. So that was an important point and actually still a defining moment, I think, in my understanding of my own character. Ultimately, Black Box was acquired, not for a huge amount, but by a group of MBA students who took it over because they saw the cash flow was quite good. Business was also uncomplicated. Through Black Box, I met my cafe partners. Oh. He was operating a cafe. He was exactly like me, student also engineering. He and his now wife, then girlfriend, were running the cafe outside. We got to know each other because we shared manpower, for example, to administer the game stations. And subsequently, together, we kind of acquired a cafe together with our savings.
And
So that's
this
our
was
cafes.
Reeds.
It was called Super Snacks.
Oh,
Yeah, it's still called Super Snacks. So we have one in Utown.
Oh,
but the
okay.
first Super Snacks is actually, and it still is at PGP.
Okay.
Yeah, and we cater to hostelites, and we open till about 3 a.m.
Yeah.
So we have a night monopoly. Very quickly, we figured out how to work with the hostelite students on a casual employment basis. So just per hour. We did start as very conventional businessmen.
How do you have the guts and the know-how to start cafes at 23?
Guts, I'm not sure. Maybe, like, it's after me, so just kind of retrospecting look then, right? I think maybe that didn't make a whole lot of sense because like F&B retail is tough business, right? But maybe it was a blessing that I didn't think too much at that time. In terms of know-how, I've always kind of liked food. So during my junior college, actually the part-time job that I did was working in a Japanese restaurant. So yeah, I have an appreciation of how to set up a commercial kitchen. So I guess that psychologically de-risked the idea that I do at least have half the operational side of the knowledge, right?
After you started Super Snacks, you also lost quite a lot of money in a Japanese restaurant. How did that shape you in terms of the world of startups?
So yeah, like I'm surprised you have all this information. Buoyed by the success like of our first few F&B outlets, we're very confident. We've also amassed some savings, and we thought that we could expand and do more and do different. So we opened a Japanese restaurant actually at Raffles Place. That's the area of my comfort, right? I actually do understand how to operate the kitchen side of a Japanese restaurant, and I know the suppliers. On paper, it looked like a good idea. Yeah, but we're losing so much money. Yeah, it was so painful. In fact, the term we used, we were hemorrhaging money. Yeah, and this is all your own money, right? Every day you know how much you lost, and then you think that I could have bought my mom something with this, right? But now it's burnt. Burning your own money and burning a company's money actually feels different. So this is one of the learnings I've had, right? Kind of how to understand personal money versus kind of like business money. So yeah, so that was really like a defining low period that taught me a lot of things about myself, about maybe understanding risk and understanding business.
And after uni, you went into non-profit and finance.
There are two feelings that I had when I graduated. Number one was anxiety. Why anxiety? Because financial crisis, and actually, like, guys, we serve army, right? So I felt a bit behind. Actually, upon graduation, I still didn't really know what I wanted to do. Actually, the government was supporting the industry. They were paying the banks to hire us, but the pay was minimal. They're talking about maybe 2,000, 2,500 a month. But you could still work in a financial institution, and then, you could still clock experience better than being unemployed, right? So I explored that, and then I realized that I could do the work. I did mid office, I did front office, so client-facing work, right? But then I realized that maybe I wasn't sure that's where I wanted to be. Do something that's primarily about money, right? That's kind of like A/B testing, but like that's something that I tried, and then I moved to a non-profit, right? Do something that's not about money. So yeah, the company I worked with was based out in Washington, D.C. Also gave me a little bit of a global regional lens of non-profit, right? It's a typical kind of like 9 to 5, 9 to 6 kind of job. I felt the self-discovery was key. And then after that, I went to further my studies.
Yeah, and share more about your time at Fudan and how it made you realize that tech was going to change the world.
My parents both have a master's degree. So I guess the expectation, or kind of like the bar, was set that we were open to the idea that maybe my siblings and I would also study after a master's degree. So for me, that was always at the back of my head. When the opportunity presented itself, I applied for scholarships, and then I got a scholarship. And one of it was to spend some time in China. I studied when I was MBA, basically. So yeah, it was interesting because at that time, tech was really on the rise, right? And then my classmates in China, I saw them taking out their money out of like their bank accounts and then putting it into WeChat. Yeah, which was very preposterous to me, right? Because I think a few things. If you ask me to take out my savings from my POSB Squirrel savings account, right, and put into WhatsApp, right, that'd be highly unnatural to happen. And fundamentally, I feel it's maybe being Asian, right, where we put our money is where we put our trust, right? Yeah, and I trust my government, and I trust the government-backed institutions, right? But in China and then actually in America as well, right, we saw that the big tech companies were like up and rising. And in fact, the degree of morality that the general public holds maybe some of the big tech entrepreneurs too versus the government might either be the same, or they might hold the tech companies to a higher degree. So when I came back to Singapore, I was kind of like really looking for a tech role.
And you went into Shopee, into the global launcher team.
Yeah.
Were you an early employee there?
Yeah. So actually, at the time, we were called Garena.
Oh,
Yeah. And Shopee was an idea. In fact, I joined as a VC. So we had a venture arm then. I mean, it was a CVC, right? A corporate venture capital firm. Our leadership had a very, I would say, a very strong tech entrepreneur view of resources. So you buy or you build, right? And they were funding both. They were funding investments and funding acquisitions. They were also funding like the development team. It was then called Garena Labs. Now it's called C Labs, right? So you're talking about very highly motivated, high-powered engineers building a lot of product and testing a lot of it. Shopee was actually one of those. So most of us were double hatting. And there were a lot of projects that were concurrently run. Each of it with the potential and the idea that it would fuel an IPO, which ultimately did happen with C Group.
Yeah.
Shopee was kind of like one project that I was also thrust into. Garena has desktop games, right? League of Legends being maybe the most successful at that time. But yeah, we were testing different things. So I was also kind of like helping out Garena Mobile at that time. Yeah, but Garena Mobile started kind of like tapering off, and then Shopee started showing very good promise, primarily because the team in Shopee was so amazing. It's like really good operators, very skillful. I would say abundant in their worldview, right? And for me, this is all very surprising. I mean, a cafe operator, right? and very exciting. So yeah, just like being able to work alongside these people to launch, kind of like you're talking about from business plan.
Yeah.
Right. And then securing internal funding with maybe the stakeholders of Garena. And then working with, at that time, Garena's overseas officers to kind of like soft launch and convincing some of the team members to also take on an additional role, right? To play a role in Shopee as well at the time, right? It was very interesting. And then at that time, the decision was to launch Shopee Big Bang. I remember it was April, and then just say 7 countries concurrent.
Wow.
And then the ramp up towards that. And you're talking about like we had to set up the entities because Shopee didn't exist as entity, it was only Garena. So we had to set up all the corporate admin and we set up all the bank accounts, figure out how money is going to flow, the working capital accounts, the trust accounts, and then we need separate, we cannot commingle the accounts, right? So, some money coming in, money going out because we are a platform in the middle where we play the middleman, right? So figuring all that out and figuring out all the logistics behind it, right? So the supply chain logistics side of it, yeah, it was very interesting. But I learned a lot from my peers. So that was fun.
Do you know why Shopee is like the number one e-commerce platform in Southeast Asia now? Do you feel like you could see it happening?
Yeah, I mean, a caveat to that is that everyone claims to be number one. It depends on what.
Number one, maybe by monthly active users.
Shopee is, to me, as successful as it is, primarily because of the leadership in Shopee and the leadership in C Group. Yeah, these were very... I remember some instances that were surprising to me, but have proven that this is why they're successful. So at that time, our CEO made some very big calls. Number one call was to really focus on mobile. And at that time, Q10 and Lazada were the leaders in the market, and they were primarily web-based, right? I mean, Q10, now in Singapore, they are facing like very challenging times, right? But they were the incumbents at that time, right? And then to make a call that we will be mobile first and not compete on web was, to me, like quite ballsy, right? Given the entire market is already proven that primarily is web. I mean, operationally, there were a lot of small calls that kind of like edged us forward, but yeah, this would be one of them. And then on the group level, there was a lot of support behind the e-commerce business. Like given away X burn rate, right? It almost certainly mean that, we're going to have to aggressively fundraise in the market. Yeah, but they made a call, let's sink that budget, right? And then we will solve that part of the equation.
Oh, very big bets.
Yeah, once again, cafe operator. Right? What's going on?
How do you manage the kind of cultural differences?
I would say the roots of it still Chinese, right? So when I was there, actually, what helped was I just graduated from Chinese university. So yeah, I was kind of familiar with the culture, and I also familiar with the understanding, right? At that time, you're talking about like Alibaba had like 996. Actually, after a while, it became like 7-Eleven. It's like 7-Eleven because it's like 24/7 basically. Yeah, 996 is 9 a.m. to 9 p.m, right? 6 days a week, right?
Yeah.
But Alibaba was pushing 24/7 at that time. The engineers don't even leave the campus, that's what we call it, right? Everyone was high and very excited because they're building things and you're talking about like millions and millions of users using it, right? So it was very, very fulfilling and gratifying. Wow. That was kind of the culture in the earliest days of the company. Speed to market and the rate of iteration. Some things work, some things don't work, but very quickly you iterate. Just focus on things that work, double down, and then start testing new things again. So the rate of iteration was very strong, and I think that that idea trickled down all the way to the entire team. So there are, I would say that, the culture is still kind of there. I mean, Amazon likewise, right? Like, because that was what brought the company success in the earliest days. But I think as the company matures, like, part of it, I don't believe it's as intense as it was in the past. But yeah, there will still be elements of maybe the founders' like beliefs, value systems in it, especially given that, it's come a long way.
That's really interesting. And you went on to start Alta, previously known as Fadell, which was a private investment platform,
Right.
currently a regional fintech company.
Yeah.
Could you share a bit more about what was how you ended up there? What was the problem that Alta was solving?
I'm not really a serial entrepreneur. Maybe I'm a serial operator, right?
Okay.
I run companies and I do enjoy running SMEs and the 0 to 1 phases of things. So Alta would be an interesting example of that. The CEO actually was my army friend, right? So these are all friends. Each company is started with friends, by the way. And it's kind of like they started a company and they brought me in.
Maybe if there's one thing to take away, is just make more friends.
Maybe, yeah. But I mean, maybe what I bring to the table, people are comfortable with me as a teammate, and people are comfortable with me as an operator of the company, right? So yeah, I mean, Alta is also one of those examples whereby, the idea was then, but we were kind of the founding team, right? Because we had to launch this whole thing from idea, we had to build out the product. The product was not launched, right? We had to talk to a lot of people, figure out the market. We have X amount of resources, so we had to do fundraising as well.
How many of you were there, and what was your role?
Broadly speaking, each one of us represent a certain asset class. So there was like a equity capital market, so you're talking about IPOs, right? And maybe fundraising by primary shares or secondary shares, right?
The idea was basically to allow people to invest in all these different kind of assets.
Yes, and figure out operationally what are the parts we can automate through a platform, right? Yeah, and our thesis was that 70-80% of it can be automated, but maybe 20-30% of it is still people, right? But let's work on the 70-80% with a fairly holistic lens on some of the asset classes. And then subsequently, we also had to split roles by functional roles. So some people had to really figure out the legal parts of it, right? Then for me, I had to work with some of my other teammates to figure out Malaysia and then figure out Indonesia.
That was really early days, or at least an nascent phase of fintech within Southeast Asia, I guess.
Yes. But that's also kind of like, I would say, the glory days of fintech. Because fintech would be the most investable kind of like segment for venture capitalists. So we were also like cognizant that, the ability to fundraise and the market was there. So we also aligned kind of like what we're hoping to build with kind of what we were seeing in the market opportunistically.
I'm guessing you were quite close to the team. What made you decide to leave and end up, starting Shoot as well?
I think at that time I've already identified myself as primarily an SME person. The highest value I bring to a team is actually 0 to 1. So, and honestly, that's also my most enjoyable time. When a company grows to a certain level, and I mean, a lot of this information, they're public, right? The company is already at a certain size, right? We have more than enough resources to hire replacements, people that are better than us, right? And maybe, passing on the baton, right, to people who can run it the next level. I'm quite clear that for me, I mean, my worldview is that one day I will die, right? That's something I say with a strong degree of certainty.
Probably.
But yeah, given that ultimately, this thing that does end up in death, like, kind of wanting to live maybe a meaningful life while I can and when I'm useful and productive, is something that's always, at the front of my mind, not in the back of my mind. So I want to be able to choose where I spend my time. And to me, it's the 0 to 1. I don't imagine I'll retire with the company. In fact, commercially, it probably makes the most sense to stay longer. But my decision-making criteria is not profit maximization. It's on an individual level, maybe meaning maximization. So I would choose something that makes sense to me as an individual, but might not make sense from a returns perspective.
You went on to start Shoot, or you went on to join your friend,
Exactly.
Justin, who was your secondary school friend.
Yeah.
He was actually already running it for 8 years.
Yes. No, that's correct.
That's
You're
a
very
really
good
long
forensic
time.
work.
So walk me through how you decided to join hands with Justin.
Yeah. So in fact, in Shield, because we renamed a few times as the business evolved. This really kudos to Justin. He was the founder of Shield, right? The business that started actually very, very different from what it is now. So it was in that evolutionary process for the past, like the beginning 8 years. And we were chatting that, hey, I'll share with you actually, if you don't intent to pursue venture scale, then you don't really need people with this skill sets, especially people like me with this kind of skill sets, right? Yeah, because there'll be a misalignment. And actually, after some time, I don't know, maybe like a couple of years, Justin made a decision and said, yeah, I want to evolve the company and pursue a different strategy, and we want to pursue scale. Right. Okay, then that's when we started talking, okay, what would that look like? Who are the people we need? And do you really need people like me on board? I think finally we came to an agreement that, okay, that for me it would be kind of like a reset again, right? Because Alta was already had fairly strong tailwinds, right? It was doing well. So whether I wanted to kind of like go back to the 0 to 1 again. Yeah, and it's yes, because my personality is I enjoy that the most, and I find maybe I bring the most value at the time. So so I joined the company, but my primary contribution is maybe like CFO, COO kind. Yeah, and Justin, I call him Wei Jian, right? So Wei Jian was like a very, very CEO, CPO, very product driven. He was very solutions driven, and that's also his strength. He's very, very market sensitive. He's able to find opportunities very quickly. Yeah, which honestly is not my strength. So yeah, so actually like that's kind of how I joined the company, and we evolved the company. We pursued also like maybe getting like strategic investors on board. And yeah, well, honestly, I have very, very, very wonderful memories on my time in Shield, because together with like the team, we expanded overseas very aggressively and acquired new customers.
How was that process of finding like product market fit since you saw it?
There was almost like there's a Candy Crush equivalent. I forgot what the name was. Yeah, but at that time, really working on that game, and then gift cards. Can you imagine? So gift cards, and then subsequently, so in-game currency, but the physical manifestation, which gift cards, right? And then subsequently moving into working with digital currencies, but still focusing on games. So our initial customers, a lot were gaming related, like Razer, right? So very familiar with that market. And then that market started becoming very competitive. We realized the company used to be called Cash Run, actually, which sounds like Lonjak, right? But anyway, because it's evolved, right? So the name made sense at the time, and then we decided, okay, that we're going to focus on maybe a sub-product that the team had created primarily for ourselves, which we were hit by a lot of fraud because we were selling a lot of game cards, right? Yeah, so a lot of stolen credit cards were being used, and then buying the cards, and then we realized that these things were fraudulent by nature, right? So actually, a lot of the algorithms were created to solve our own problems, and the algorithms were created with finance in mind. Because for us, risk is return. Risk is not something you eradicate. Risk is something you optimize for, right? There's a Sharpe ratio, right? The question is not whether you have risk or not. It's just what are my expected returns. So the algorithms end up very different, because these are financial algorithms, right? It's made to optimize risk, not to remove risk, which we came to appreciate ultimately that was our key selling point, right? Everyone else was trying to eradicate it. But you end up tightening the system with multiple OTPs, right, that people just give up. So you got a lot of false negatives, right? Whereby it's not fraudulent, but you rejected the payment, and that's business cost. Yeah. So we thought, okay, this is interesting, and it's an interesting time in the market. Cybersecurity at the time actually was just beginning to boom, right? Because I think there was a WannaCry attack that hit the government. So suddenly everyone's cybersecurity budget is like 10x, right? So we say, okay, let's focus on the Shield side of it, and the company became Cash Shield, and now it's called Shield, right? So actually we started moving into specifically payment fraud. Yeah, and then we realized that algorithms could be applied on identity fraud as well. And there was a lot of identity fraud going on. People hijacking Diablo accounts, for example, right? Yeah, so the same algorithms could be used to recognize the patterns of these people, right? Yeah, so that's how ultimately we move into fraud. And then now I think the bigger theme with Shield would be trust. So rather than just, cybersecurity, which is security, and fraud, how do you evolve and then become a company that begets trust?
That's really interesting. You raised Series A of 5.5 million to prevent credit card fraud. It was led by Golden Gates Ventures, and Tony Fadell also invested.
Oh yeah.
Like, what led to the fundraise?
Okay, so fundraising was already on the cards for us, right? Because we already had maybe regional, global ambitions. Yeah, and the market at that time, I think, was also suitable for it. A lot of investors were willing to fund founders who have this kind of like worldview, right? So there was strong alignment in that. And then as a Singaporean, there were a few kind of like top tier funds And GGV was definitely one of it. So I think we were also like very blessed to be able to work with the team at GGV, not just from the Singapore side, the China side, and the America side as well. Yeah, so working with the teams in these offices, right, which GGV allowed for, really broadened our worldview. Yeah, and it also allowed us to work more closely with some of their portfolio companies, right? Because there'll be events that we could meet each other, and then we could share about what we were doing. And in fact, like she would be a very golden example of having a very good and strategic investor like on board, and how that can like bring the company like leaps and bounds ahead. GGV is also structured to train and upskill the entrepreneurs. So, for example, I think at that time, every quarter or at least every half a year, they would fly the founders down, right, to talk to maybe the big four accounting firms to understand what's happening from accounting, so compliance side of the equation, and also maybe the strategic finance, right, the acquisition side of the equation, right? Are there targets of opportunity that we could acquire? So you imagine like they are built, and all the founders come together and we discuss about this. So they are upskilling us, right?
Yeah. That sounds really nice.
Yeah.
Very nice community.
Yeah. Very good investors.
Yeah. How was the experience of meeting Tony Fadell, the founder of the iPod, or maybe one of the creators of the iPod? Which of course led to the iPhone. How was your experience with him?
I think he's also known for being the founder of Nest, right?
Oh yeah, Nest.
Yeah, which was acquired for like also a very hefty sum by Google.
Yeah.
One of the challenges we're facing as a Singaporean company, right, trying to sell cybersecurity solutions to America is that unfortunately, while the Singapore brand is a brand of trust, right, it's not exactly a brand that foreigners relate with technology. Yeah, so we needed a globally recognized inventor to publicly back what we were doing. We had a list of people, and we approached them, and then Tony was someone that I think was willing to support the work we did. He was encouraged by what he saw as well, right? So he did his due diligence and what have you. So he gave us that backing, right? And it was interesting because we didn't think actually that it would be so possible. So and he's very obsessed about product design. His worldview is about breaking stereotypes and norms, so rethinking the way certain established understanding works. And our algorithms are like that, right? We're not created to reduce fraud, but to optimize fraud, right? And that fundamentally changes a lot of things. So as a designer, industrial product designer, he really appreciates this thing. So a lot of the conversations about that, and a bit is about ambition, right? How do you grow the company? So I think in Silicon Valley, that is a very overarching theme. The ecosystem supports kind of like going big. Yeah, and even if it fails, right, you'll see a lot of people that wear that as a badge of pride. Ex-PayPal, ex-Palantir, So their understanding of failure is very different. So working with Tony, actually, a lot of that is just like you need to think bigger, right? You need to think at a grander scale than this.
Culturally, it's quite different in Singapore, I'm guessing.
Yeah. But once again, and a lot of this is kudos to the team and the CEO, right, Wei Jian, at that, right? Because not every CEO will feel comfortable with this. Yeah, but we had a leadership team that honestly was quite fun. So actually, like we're having the opportunity to do this, and then led by the CEO, right? Yeah. It was very, very enlivening, and the conversations, and it's not just American entrepreneurs. We also have like very successful Chinese operators, and these are all like no-name people. They run the largest tech companies in China, and they have a different worldview, right? Yeah, so it was fun.
Yeah, and actually it was the early days of AI, right? Like Tony Fadell said, Shield has an army of AI sentries guarding businesses and protecting customer information.
Yeah.
Like, what allowed you and Justin to kind of identify this nascent, but very high potential market with a very differentiated technology?
Actually, like I would say people who build technology or build product, right? You would almost certainly naturally end up in AI, right? Because the technology is developing, and whatever solutions you're building, right, we hope that the next iteration of it will be faster, better, and cheaper, right? Yeah, so the natural things that end up with AI, you don't really have to purposefully look for it. As long as you are keeping up to date with the services, the SaaS services, for example, or the APIs that are available in the market, I feel you will automatically end up with automation and AI. Nice. So we were built primarily on a rules-based system. So we call it supervised learning. So it's a man in the loop. And then they would supervise the algorithms and they would treat the algorithms. But when the algorithms get more complex or the nature of fraud gets more complex, you need machine learning. And I mean, the tech industry is very, very open. So there are a lot of open source kind of models that you can use and test. So that's when we started really going into machine learning and then neural networks, right? So self-learning. So it's still kind of partially supervised learning, but you want to end up at unsupervised learning, right? Which is like pure machine learning anyway. Yeah, so it's really functional. We're looking at kind of like the cost and efficiency, right? The conversation with the CTO is like, hey, can we explore this, right? Yeah, so that, this thing becomes more scalable or more efficient. So I think we were efficient in adopting the technology that's available at that time, right? And that led us to become very, very AI-centric. Right? It just made more sense.
So as a company scales, eventually it would end up there. And you also raised a 20 million Series B by Temasek and GGV. What thought process do you go through when you think about the fundraising process?
I think like for fundraising, like a lot of it is momentum. And the momentum actually is built up. So when you have momentum, right, the probability of like maybe the next round, right, makes a lot of sense. Another thing about fundraising is that the amount you raise ideally is something that's transformational, right? If it's just progressive, right, then actually, you can raise the next round, but the after that might be tough, right? Because you don't have something that's transformational. That was kind of the market rate at the time, right? For something to be investable, depending on the stage, ideally, you're looking at 30x, 50x, right? So imagine like if now like you're pitching, let's call it a $10 million company, right? At the back of my mind, I must be able to imagine that you are a $300 million company, right? That's a big ask, right? But maybe a certain degree of optimism as well. This is possible, right? And ultimately, that, maybe we are targeting like a unicorn level kind of exit. So there was a lot of the idea behind capital deployment at the time, right? So at that time, I think the call, right, of the leadership team was that we wanted to pursue that kind of scale. So that got us on a fundraising journey to start with. And you can see that GGV played a very important role in that decision, and also played a very important role in the round itself. They put their money where their mouth is, right? They kind of like they reinvested, and that gave confidence to a lot of the other investors.
We're just going to take a short break because I wanted to thank you for staying till here. If you like what you've been hearing, please subscribe on YouTube and follow it in your favorite podcasting app, and even share it with your friends. Join me in the WhatsApp group to connect with like-minded entrepreneurs and give me feedback. Thank you so much for listening, and let's get back to the show. How do you know it was personally time to move on from Shield?
Shield is a wonderful company, wonderful team, wonderful leadership. So actually, I would say it's in very good hands. My friends at my university approached me with a new idea in supply chain logistics. My university classmates at the time were working in the very operational level of supply chain logistics. Our initial thesis for the company actually was blockchain. I thought that was also, at that time, was an interesting new technology that had the potential to really change the way supply chain logistics was working. And I experienced some of it in e-commerce already, the evolution of it. Now we have Shopee Express, right? And now we have Amazon Express. The e-commerce companies are beginning to fulfill their own volumes and compete directly with the incumbents, right? FedExes, the USPS of the world. That was very interesting, and I thought, okay, maybe it's also kind of like, I guess, reset again.
How did it become a relocation business?
When we first started, the thesis was supply chain logistics and blockchain. In fact, we took part in competitions run by the government, like Enterprise Singapore. We did well in some of these competitions with that thesis. We had a use case which was relocation, and these were like kind of like the area of experience that my classmates already had at that time. So at least we had some initial use case to test bit some of the products and solutions we were hoping to build. That was the starting point. But subsequently, when we were raising the next round, we had to think, where is the future? By that time, we realized that actually blockchain, it made a lot of sense in theory, but adoption was difficult. We were active with you're talking about the associations, right? In supply chain logistics, we were very active with also kind of like the relevant departments in the government for supply chain logistics, trying to push for blockchain adoption, but it was very difficult. The industry was just not ready for it. So we had to make a call, given the information we have at the table, right? What would the Series A round be about? It was interesting that we had a lot of data of people relocating. Yeah, and we realized that relocation is one of the biggest and most stressful life events. There was significant information asymmetry. So let's say, Eric, you're moving to London. You're very stressed about London. And you almost certainly have to sell everything you have in Singapore and then buy everything in London. So very big commercial event as well, right?
Yeah.
So very big money. And then if you trust us with one part of your service, likely you'll be open to us upselling or cross-selling other things. If you trust us with your physical move, I could introduce you to our curated and trusted accommodation partners. Private banks, they can set up your overseas bank account. Insurance you're going to need. You're going to need to apply for visa. So all of that long tail, because it's stressful and you have so little information of actually who are the trusted brands in UK, we know. So we realized that the platform model works for this. With that, we anchored on the idea and built into relocation.
Was that still blockchain related at all?
By that time, actually, we had to kind of like deleverage from Web3 towards Web2 again, because most of our users are still familiar with Web2. And you're talking about like a B2B2C kind of business model, right?
Yeah. And what was the kind of pool that you realized you found some sort of product market fit in this space?
A lot of it's just like conversations with the end users, right? I mean, ultimately, as a business, we are looking to create value, right? And creating value is either gain creators or pain relievers. So we have these conversations with our customers, and we realized that there was significant stress in it, and there was significant margin in it, right? People are willing to pay for a solution, and they would definitely already pay if they're relocating, right? It's either they pay, they're willing to pay, or the company is willing to pay, right? To smoothen out the whole relocation process.
And you also raised a 7 mil
Led by Crest.
led by Crest Ventures. How was that fundraising process like, and how did that kind of accelerate the growth at Moovaz?
Moovaz was one of the hardest to fundraise, primarily because we were in a niche industry. Cybersecurity, like fintech, e-commerce, I think these are industries that have quite a strong tailwind. And there are enough funds that focus their fund mandate on these areas. But supply chain logistics, I think there was still a group of people that wanted to fund it. But the niche of relocation was something I think people didn't understand that industry so well, right? Which is why primarily it's still an offline business, right? But that became one of the investment thesis items as well. It's so offline that there is a potential for one online player to come and maybe meaningfully disrupt the market. So I'll say that, like maybe from the operator perspective, right? Moovaz was something we really had to think very carefully on how this is win-win, right? Why would this make sense to an investor at this quantum and in this market, right? Where are the exit opportunities, for example, right? Who would exit? So we had to do a lot of research and a lot of homework because so little was understood about this market. I mean, I have like 100-page reports. Just understanding the market itself, the state of mobility, because these things are not widely documented as well. It was a lot more work, I think, in the fundraising for Moovaz. Ultimately, I think Quest Ventures supported the work we did. Quest Ventures is known to be, they support operators because most of them are operators themselves. I'll say very, very good positive conversations. A lot of it was about how you're doing on Google Ads, for example. Let's look at your operational metrics, right? Which are the areas that we need to maybe scale back on cost? Which are the areas that we need to spend some money so that we can explore new markets like India, for example. A lot of it were very, very operator kind of conversations. But I also feel that's where we found the strongest alignment. That it's kind of like operator to operator, right? Or you can call it entrepreneur, but I really saw it more as an operational function. We appreciated each other from the perspective, and I think that led to the confidence that we could partner with each other. One as an investor and the other as a business.
Do you learn anything about leadership at Moovaz? Like how do you gain the trust of your team and yet set high standard?
I would say Moovaz was probably the most humbling, in fact. Because Moovaz was the first time that I was a CEO. My appreciation is that it does get very lonely at the top. The onus and the level of responsibility is significantly different when you're number one versus number two, number three. So I would say maybe the feedback loop was the strongest and the most pronounced in my role as a CEO. It actually was interesting because once again, the business was started by my classmates, right? Initially started, and then they came in and we had a conversation and they felt that for the business, it would be best if I played the role of the CEO. Once again, like all of us are co-founders, right? It's just who is contributing in what area. So it's the first time as a CEO, and then suddenly I realized that, let's just say that if you're number 2 or number 3 in the company, right, you are still privy to some conversations.
Like level 2 and 3 managers, is it?
Yeah. Or you are, you can still hear things from the ground
Yeah.
but when you're the CEO, everything is your responsibility. People hold you responsible. And I also want to, be an effective, ethical, and practical leader. How do we balance those conversations whereby, while we want the culture to be supportive, to be one of like trust, right? It's not about FaceTime, but it's about trust, right? That each of us have our area of contributions and let's treasure that trust. When the going gets tough, how do we hold ourselves and team members to a high standard? How do we have difficult conversations, right? When the standards are not met. Yeah, a lot of these things, I realized that as a CEO, I have a very significant say. I mean, I try to pull in like my peers because, sometimes you really feel a bit alone. Yeah, but pulling in the peers and we talk about it, but still, one decision has to be made. Yeah, so I think that was very humbling because there's a lot of feedback. Some were good and some were significantly like areas of improvement. But I had very, very wonderful teammates. Everyone's very open to sharing about it, especially the difficult conversations, right? And there was still trust in each other that, okay, we can have these conversations. We might, be unhappy with each other for the short term, but we have the strength, especially because we started as friends, right? To be able to come back and then still say, okay, how do we move forward together?
Maybe just focusing on the difficult conversations. What were some sort of difficult conversations you felt?
One example of it, right, was like communications. So we in our company we do like an equivalent of Strengths Finder. Have you heard of that?
Yeah.
Okay, so each one of us has a different, I guess, like profile, right? Mine is quite overwhelmingly analytical. I mean, in today's day and age, most people really appreciate someone that's analytical, right? But as a leader, what I realized, right, it creates significant stress amongst my peers. And one example, like in our weekly meetings, right, the person that has the data and the spreadsheet is the winner, right? Yeah, and I normally have data and spreadsheets, right? And I like to look at data and spreadsheets. So that kind of like forces my peers, right, to also care a lot more about data and spreadsheets, which might or might not be their thing, but that might be my area of comfort, right? So I tend to defer to it because that makes me feel more confident or more comfortable. Yeah, but I've come to appreciate that what it can result in is that I'm confidently wrong. Yeah, and that's the truth, right? Whatever frameworks I created or whatever analytical understanding I have of the numbers in front, right, is based off my personal lens, my personal biases, right? I don't know what I don't know. And my head of marketing, who had a gut feel about a certain campaign or a certain market, turned out to be correct. And I was confidently wrong. So you can imagine what kind of stress that creates, right? Whereby you realize you can't convince your leader because you don't have the spreadsheet. And obviously my peers gave me feedback. It's like it comes a little bit stressful, right? When you go into that mode of just kind of like focusing on the numbers because they cannot prove or disprove with numbers, but they are speaking from experience.
And during your time here, you also became a dad.
Oh yeah.
Congrats. How do you navigate your newfound responsibility along, a very high pressure startup life as well?
My wife played an important role in that. Yeah, I mean, what it felt like is like actually they both felt like kind of like my babies, right? The company and at that time, I think when my child was born, it was also kind of like when it was quite clear that funding was slowing down already. Right, so it's getting harder and harder to fundraise large amounts, in fact, and we had just raised a meaningful round, which means that the criteria for the next round, you can imagine what that fundraise needs to look like for it to be normal. So, yeah, I mean, it was just getting more stressful. So actually, I would say maybe my wife played a very significant role in really helping to balance out these things. And I'm just thinking, actually, I don't know how many people out there like are dads yet, but for me, like when my child was first born, right, that was very transactional. You cry, I feed. You cry, I feed. So because that character is not developed yet, right? It really started feeling like maybe like a family member. Probably I would say month 6 to month 8. Yeah, that's when they start interacting, right? And then and that's when you really start. I really started like appreciating that, hey, like ultimately this is also a responsibility that I have for life. Right, so I need to be making sure that I apportion maybe my bandwidth responsibly, right? So actually that was the part where I really had to learn how to balance. Right, doing more doesn't mean sleeping less, right? It doesn't mean that it's better, right? It might actually mean that on a net level I have less to give to both sides. Yeah, so that's really where I start to think about, I need to be able to really manage my energy right? It's not managing time, right? You got 24 hours, you got 24 hours, the same one, right? But it's about the energy and the focus of which we execute some of our duties, right? How present are we, right? And then how meaningful is the outcome? Yeah. So I really had to kind of like hunker down and focus on that. Yeah, my wife also gave me feedback. My wife works in civil service, right? So she has a different lens, but she works in HR. So yeah, she also say, hey, these are things you want to like take note of. You know. So yeah, I think that was a whole new like learning just how to rebalance like life and work.
How do you manage your time? Like any tactical, practical advice?
Oh yeah.
Super busy.
Calendar, very important. One framework that's helped me a lot is GTD, like getting things done, right? So having a system, a complete closed loop system, right? That therefore I can trust, right? That I can offload certain things like mentally onto the system, is useful. So I mean, like emails, for example, I use Inbox Zero methodology, right, on my Gmails, and then that kind of classifies things into things that need to be done within 1 day or things that need to be done within 7 days. Things that, you know, I'm awaiting reply for, things that I've delegated, and then things that are just informational, right? So my inbox is always zero because it's always categorized, and I just go back to the system. And then everything that I need to be, my duties, so my events and my tasks exist on the calendar. Yeah. So yeah, having that system helps. The second thing is about time management. Yeah, my mornings are typically dedicated to meeting friends and people, or things that are more exploratory by nature. So being here together with like Eric, for example, or having a coffee with like a friend or maybe a mentor. I have mentors as well, right? Or an acquaintance, for example. Yeah, those are the mornings. The afternoons, I dedicate it to the team, right? So that's when maybe I put on the manager hat, right? And then we have team conversations. Yeah. And then like I'm like everyone else, like evenings I go back, I try to have dinner with my family, and then at night we watch YouTube, and then I clear emails and just like admin stuff, things that I can do myself. I put my kids to bed, and then after that I try to finish off all the. But you know, I know that this time is set for this purpose, and I have this amount of time to finish these tasks. So it becomes a lot less complicated when the things are not commingled.
One thing I appreciate is how you put away your phone for this conversation.
Oh,
Because
yeah.
you wanted to be present and
yeah.
I think we both get the most out of this conversation.
Yeah.
But also, what have you learned as a maybe third, fourth, fifth time founder that differs from like a first time founder? You know, the first time founder will be working 24/7.
Right.
Now I think you would probably not be working 24/7, but what do you feel like is a complete waste of time? What do you feel like has been helpful in managing?
Yeah.
that as well?
I actually would not have changed what I was doing because I see it maybe as a learning journey. There's some things I've read maybe in books, right? Like entrepreneurial books, that I've realized that I can only really appreciate and understand it because I've got it wrong before. Yeah, so I feel that learning is part of the journey, right? The front part, hustling, sleeping less, almost is character building, right? I don't believe that maybe personally, right, that I would have been able to shortcut the thing and suddenly arrive at this level of understanding purely on theory. So I'm one of those people that you tell me the fire is hot, right? Okay, but it really helps that I touch it and I realize that you're right. Right? Then, you know, that's done and dusted, right? Yeah. It's correct. It's hot. And that's how it feels like. Yeah. I think that maybe this, if we look at it from a journey perspective, right? Yeah. Working hard and going through that phase, being developing the skill sets and the depth of character to be able to come out of maybe depressive moments, right? Is a skill set that now gives me a different lens and appreciation of the way I want to conduct myself today. Yeah. Another thing that's changed obviously is that my life stage is different now, right? When I was a younger man, right, I think I've always been more of a strategist actually and an operator, right? But when I was younger, the only job roles that I could play were administrative and more production, because you start, you know, from the bottom, right? It was very awkward for me, right? Because that's the way the corporate ladder works, right? But actually my key contribution areas are probably strategy and other and research, for example, right? And making broad level operator decisions that have meaningful impact, right? Yeah, so that life stage was very awkward, but I had to go through it so that now I understand what it means to be, you know, to be a good follower, right? So that I understand what contextually a good leader should look like and how the interactions work. So I had to kind of like think through that time. So I think as an entrepreneur likewise, so the front part actually had to kind of like, you have to live through it. You have to kind of learn your own personal life lessons. Yeah, and then you kind of become someone that's at that life stage who you need to be. But I think just being cognizant of life stages and what's the best version of myself I can be now.
Character building is a huge part of it. Like you can't shortcut the character building. But
Yeah.
I guess as a first time founder, I remember wasting a lot of time on like, logos, on names, or like this kind of like little stupid
Yeah.
things that,
Yeah.
and like maybe not even talking to customers until like the third month or something
Oh
like
yeah,
that.
yeah. But now you've kind of like experienced that and you realize that okay, maybe in your next gig, right? Like that's something you do not want to repeat.
Yeah.
Yeah. I mean the antithesis of that would be that you straight away start talking to customers, right?
Yeah.
But then you don't know what the null hypothesis looks like, right? So you always be curious and you might trend towards that.
Yeah.
Yeah. But now you're clear, right?
Yeah.
So actually, with a stronger degree of dedication, right, you will be talking to your customers. So yeah, I still
That's
feel
true.
that front part's important.
It's not just character, it's like it affects how you deal with the day to day as well.
Yeah, it's your
Yeah.
worldview,
Yeah.
right?
At this time, you also decided to acquire 2 companies, the Finder and GetVan. What were some lessons about acquisitions for startups?
A lot of it was opportunistic or circumstantial. But one thing we had clearly was a thesis of data. A big part of acquiring the Finder was they were a 20-year-old brand. And they had information both from the consumer side, right? And then they also had information on the supplier side. And 20 years worth of it. So we found that a very meaningful acquisition. The other thing needed to achieve through the acquisition was credibility. We were a very young company at the time, and the business relocation was not appreciated nor understood. We needed something that was more significant in terms of like announcements and milestone to let people recognize that we are like a force to be reckoned with. And it's also important for momentum building because we did have a fundraising strategy. Yeah, so it was with that purpose. GetVan was opportunistic. He was also a friend, and he had already built a system to manage on-demand first mile and last mile delivery. The system existed, and he had a pool of suppliers, of drivers. And at the time, we realized that, rather than work with third-party people, if we have an elegant system to work with, we might as well monetize that value chain ourselves. So GetVan was also opportunistic. We acquired it for those reasons. And subsequently, the founder of GetVan also joined our team to head up the department. It goes back to maybe the learning I had in the earlier days, right? If you have some resources, which is more efficient, you buy or you build. Right? The guys and I were thinking about this, like, which is more efficient, buying or building.
Yeah, that sounds nice. If you're comfortable, do you mind sharing out how you ended up leaving Moovaz?
Oh yeah, so a lot of it, it's about conviction once again. Yeah, so we actually had this conversation with our board of directors, like, right, before we decided to look for an acquirer. Yeah, at that time, the funding winter had already arrived. The state of relocation because of COVID, right, was we had very healthy short-term spikes. Basically, a lot of expats going home, right? So actually, the business was doing well because relocation was very strong, right? But what that did, right, was throw all our numbers off, right? We've done like a 100-page human mobility report that documented, right, based on United Nations data, the state of human mobility worldwide. So we had a certain understanding of which are the key departure markets and which are the key arrival markets, right? And we had planned our strategy around that and planned our resources around that. Yeah, but amidst that whole time, right, in the funding winter, we have very, very low conviction about the state of fundraising, which means that our fundamental business model of fundraising, right, whether we can raise a meaningful next round or it'll just be a very, very, not the most transformational round. Yeah, or even a down round, right? We had very little conviction about the state of relocation, right? Which actually has turned out to be true. You can see Singapore and Hong Kong from an expat perspective, it's extremely low now. So yeah, and then the last one is the conviction of the business model. Given the whole state of flux, we didn't know where the markets were, we don't know the business model is, product market fit. Yeah. So we had lengthy conversations about this. And then finally, I think we decided that we do need to look for an acquirer. Because looking for an acquirer, typically you're talking about 6 months to a year. Yeah. So with the go ahead of like the board, we were looking for an acquirer, and I think like we also like we were quite blessed. We managed to find an acquirer that was our longest like operating partner. Yeah, and they formed like a mini consortium, and then they came in together. Yeah.
Did your shares get bought out as well?
Yes, because the acquirer was someone that I would say maybe they are more familiar with the supply chain logistics business rather than a software tech business, right? Ownership was very important, and agency was very important. Yeah, the boss needs to be the boss.
Yeah.
So yeah, the understanding was that they would fully buy out the co-founders. There was a period where the co-founders, we had to stay back just to make sure that the transition is smooth, and they acqui-hired the team as well. But that period, I think ultimately we got through that period, and now the company is independent.
Do you take a break after this, or?
Oh yes, yeah. It's actually like with the blessings of my wife, I think I was probably one of the first people to land in Japan, actually, when they first opened. Yeah, they announced that their borders would open, I think, on the 11th, and I was there on the 12th. Yeah, and at that time, it was nice. It was just quiet optimism about Japan that the tourism industry would come back. And all the places were empty. Yeah, it was amazing. Yeah, and so I spent some time there, trying to just realign. I mean, I wasn't burnt out or anything, truth be told, but just thinking about what's next, right? Like from a purpose-driven and faith-driven perspective, like where I should be dedicating my time. Where can I be the most useful and the most valuable? One framework that I was using was like ikigai. Yeah, so just trying to think about maybe my contribution areas in those lenses. And ultimately, maybe the conclusion was that I still love SMEs. So I'll work in an SME. Digital transformation is something I would love to contribute to because I run traditional companies, but I've also worked in scaling software companies. And I'm the operator, right? So I understand actually how the org chart differs. I understand how financing differs, and I have a good handle on how an evolution needs to happen, right? Yeah. If you want to digitalize a company, and then ultimately the end state is to have like innovation department or a digital rendition of your revenue, which is the new BU, right? How that needs to happen. Yeah, so I thought that would be a key contribution area. So yeah, that was the conclusion I had from my break.
At that point of time, you were also in digital mission ventures, and your faith was shaping the way you operated your business in a certain way.
Yeah.
The digital mission ventures, which is based on a Christian framework, which is a creative restoration through sacrifice. To bless others, renew culture, give ourselves to love and serve others. I know it sounds super lofty and idealistic for our listeners, but how did this kind of mentality shape your next decision in terms of your career as well?
So Digital Mission Ventures are run by a group of entrepreneurs actually. So these are operators, right? So whatever you shared about Digital Mission Ventures was not my worldview, because the community I hung out with, a lot of them are fellow startup entrepreneurs, right? A lot of us are fundraising aggressively, and a lot of us have this software angle and this venture scale, blitz scaling kind of like culture, right? So very high pressure, entirely growth focused. But at that time, I think I was also thinking, is there an alternative worldview? Right? Because I was quite sure that this thing cannot be the only way to run a business, right? Especially look at our forefathers, right? They probably opened some small shop, right, and a row of shop houses, and then maybe it's multi-generational, the business, right? But there are alternatives to this current narrative. I applied to the cohort of Digital Mission Ventures, but our company was already past the stage, no longer considered early stage company. Chris, one of the founders of Digital Mission Ventures, he suggested that maybe I can still participate and learn, but maybe contribute as a mentor in that project. So that got me on my journey of learning about new frameworks. Sacrifice is a big word, right? But the idea, right, is that maybe move from a world that is exploitative. For example, I'm going to create ads that are addictive. I'm going to create gamification mechanisms, right, that serves me, meaning daily active users, right, rather than serves you, because you're addicted to it, right? So that's exploitative towards something ethical, and ultimately something redemptive, right? Which is maybe, like you said, a loftier but a healthier call. Something as exploitative is win-lose, right? Something as ethical is trending towards win-win, right? Yeah, and then something redemptive is what I lose, so we all win. It's not sacrifice for sacrifice, but delayed gratification, giving up the short term for who you hope to become tomorrow, right? So I feel it's a lot of that. It's really having a more abundant view of the world and having a longer term view, right, of the value you're creating, right? One idea of it from a financial perspective is, let's not look at return on investment. Let's look at multiples of investment. Return on investment, as the market defines it, is on an annual basis. If you're doing 10%, you're doing okay. If you're doing 20%, you're doing great from a market returns perspective. But you are evaluating this from a lens of 1 year, right? But let's say if I give you $100, and I have no timeline, but in 20 years' time, can you create $500 worth? That is multiples of investment. And it's not in a 1 year time frame. It's almost like I'm going to lose $100 in the short term, but you create $500. Maybe I get $100, maybe I don't, but you've created $500 for the world. Yeah. So that is, I feel like, abundant view. Can be very enlivening and extremely purpose-driven. I can serve people well.
It feels as if public companies wouldn't be able to do this because your investors would be like,
your quarterly reports. Interestingly, one key transformation, right, is that I used to think that it's not so tenable, right? But in DMV, I've met very good entrepreneurs, right? I would say most of them are better entrepreneurs than I am, better operators, and they have proven across the years, I think, like yeah, like some entrepreneurs have operated a company for 20 years, right? That you can operate a company like that. And it's so enlivening because I will visit their companies and I'll see that culturally, this is so different, right? They all paid market rate salaries, right? Like we don't have to go crazy with ESOP, right? Yeah, and you can see that they work together. Yeah, they all knock off on time, right? But the company is doing very well, right? And a lot of it is because of the founder, right? So introspectively, I tried thinking what kind of company I want to run now. Now that I've seen this, right? Cannot unsee it, right? This thing is possible. And these companies are, I think, valuation higher than mine, right? So yeah, so it kind of like chew off whatever I assume to be the most efficient tactic available or the modus operandi, right?
Yeah.
Into question. And I start learning that actually I would love if I can be kind to my employees, pay them market rate, but then consequently, we cannot pursue growth at all costs, right? And consequently, I need to throttle my expenses because I need to pay them market rate. I cannot grow the team aggressively, right? Yeah, I need to be able to support them for X number of years. So yeah, it's just like recalibrating of these things. And I think in a good way, given the funding winter that we are still in now, right? It's like end 2024, right? It's still a funding winter. Quarter on quarter investments continue to drop significantly. It helps maybe the new operators of tech startups think about the long term, right? We can think of fundraising as financing, but other forms of financing would be debt. Profits is actually a very good way of financing a company, right? Selling shares, which is external fundraising, right? You issue primary shares, like it's also one form of financing. Yeah, but if the multiples are so low, meaning like the valuations are low, right? And therefore, consequently, the amount you can raise given 20% dilution, right, is a lot less, right? Then it might not be the most transformational amount of capital, right? It might logically make sense to pursue the other two forms. So yeah, so a lot of these things that I feel, for me, having gone through like volunteering in digital mission ventures now into the 4th year, working with a lot of purpose-driven founders, looking at these frameworks, coupled with the funding winter, right? Yeah, suddenly I feel that there are a lot of new perspectives. But the community, this community is the one I feel most.
Hey, we're just gonna take our final break before we carry on to how Junxian joined Goodwill. Once again, I hope you've subscribed to the channel and followed it on your favorite podcasting apps. I just want to thank you so much once again for listening. You could be listening to so many other things out there, and I hope to be able to create more podcasts such as this so that you are able to grow and be inspired on your own journey. Thank you so much, and let's get back to the show. Yeah, maybe let's talk about Goodwill. It was a management buyout of a listed company called 8VI. I think there was substantial investment losses of almost $1 million Sing dollars in 2024. And from what I saw, they transferred their assets into Goodwill Private Limited, which is a company you own today. And 70% of the workforce was actually let go earlier this year. Some had pay cuts. Right now, it's 1.2 million of profits. How do you decide to take on this endeavor and manage all this change that's happening within the company?
Thank you for asking. After the whole ikigai episode, right? So there are a few projects actually that were available to me, SMEs. SMEs are defined maybe like revenue 100 million below, employee headcount maybe 500 below. So that's kind of like maybe one definition of what an SME looks like. Yeah, so that's kind of like where I thought I could add value to as well. So of the projects, the one that I felt the strongest alignment to was financial education. I felt that has made a significant difference to me, and maybe in the longer term, maybe for my children as well, right? Because I am familiar with how I would like to align my life goals with my my financial plan, my life plan, my financial plan. So so I thought that more people could benefit from it. So my role is actually to build up the technology and the product. When I first joined, those were probably the best years. COVID was the best years of the company actually. Yeah. But subsequently, I think after COVID, a lot of consumer behavior changed, a lot of market rates changed, and the company, unfortunately, were hit very hard by it, right? But one thing I do want to share is that in a free market or in a capitalistic market, right, companies must be able, as naturally as a company grows, right, a country must be allowed to downscale.
A company, yeah.
Right?
Yeah.
As in we have to take it in the same breath, right? Because companies survive by this mechanism, right? And when the market is good, you need to grow. When the market is bad, you need to shrink. That's how you survive, right? I've come to appreciate that this is very, very understood in the West. This is very ununderstood in the East, right? In Asia, it's almost like it's a bit of like family shame. I don't know. It's like you're a failure, but this all part and parcel is as natural as it gets, right? So I think that's kind of like one thing I wanted to share, right? The good entrepreneurs, right, actually are the ones that are able to make the call, right? And companies, good companies are the ones that are able to ride this wave, right? And we must allow for it to happen because we are a capitalistic society, right? And we are a democratic society. So these things is what will happen, right, in such a society. So for us, the founders were working very hard. In fact, I would have thought that other founders might have made the decision to cut earlier, right? But they were very dedicated to the workforce. So actually they tried to really hold out to the end until they had to make the call. And the way Goodwhale was formed actually was that we still see ourselves as a part of extending that vision. Right? The vision of the holding company was to empower lives with sustainable wealth. Ultimately, we felt that we had certain conviction, right, to say that, okay, it'd be a pity to let this just peter off. And we had a lot of users as well that needed to be serviced, right? We just need to restructure the company, and the company needs to be financed, right? So we need to think about who's going to finance the company as well, and how's it going to be financed. We need to understand how long we have and how much money therefore is needed inside. So we went through that whole conversation, and part of the restructuring effort, right, was like a management buyout. So the then Taiwanese general manager, Will, right? So Will is the CEO of Goodwill now. Yeah, there's a pun in that, right? Yeah. So we wanted this for good, right? And Goodwill is a balance sheet item, right? Yeah, and it a lot of it is about intent and brand. So we feel we wanted this as part of our DNA. With the blessings also of the parent company, we created Goodwill. Yeah, so Goodwill was created maybe about last year. A very auspicious day, 8th of August, 8. With the intent of furthering that vision to create and provide like good quality content and tools and make it universally available. Yeah, and for it to be universally available, right, it has to be hyper-personalized, hyper-culturalized, and multi-language, right? That's how it becomes universally available, which is only possible with generative AI. Yeah, so there was also a point in time whereby there were technological breakthroughs that made it possible. Otherwise, they're going to have to hire a very big data science team, right, to be able to achieve those three things, right? But now, because of, I guess, OpenAI, actually, like Google started it with Bard a long time ago, but now they allow us to tap on these foundational models that I can achieve all three at a very, very low cost. So suddenly, this worldview and this vision is possible. And it's like GPT 4.0, and only after retrieval augmented generation is this possible.
How are you using Gen AI to achieve the three things you mentioned?
So hyper-personalization, hyper-culturalization, and multilingual. People don't realize that, Malays can't invest.
Oh, okay.
It's not Sharia compliant, yeah. So, which means that whatever you read on YouTube, right, most of it's not relevant to them, right? So, personal finance needs to be culturalized, right? And that's just one culture, right? There are many, many different cultures, right? Like cultures, like we have a larger user base in Taiwan, right? And culturally are very different from Singapore, right? Let's just say you graduate into debt, right? Which means that your financial planning is not the same, right? Entirely different, in fact. Yeah. So, it needs to be culturalized and it needs to be personalized because money is personal, right? And then it needs to be multilingual. So, large language models are built primarily in English. So we need to create systems that, let's say, is in Tamil, right? So take Tamil input and then translate it to English, and then English run it through a large language model, do whatever processing you need, and then output in Tamil again, right? This thing is all possible because now like large language models are made available to us at this kind of cost. Yeah, imagine that if I didn't have the large language model, what kind of engineering team I'll need just to fulfill that.
Yeah, and what are the kind of product offerings right now that
Goodwhale, we have Goodwhale ABC. So we feel that financial education can be like ABC. So we have Goodwhale Buddy and we have Goodwhale Community. The academy side, we do teaching. So we still do like in-person trainings, and we do in-person follow-ups. Because once again, like money, a lot of it is personal. This also helps us better understand, get feedback from the ground, actually what are the parts that make sense, what are the parts that don't. And we see ourselves as ethical and practical. Things that must be built for the long term. We really like Warren Buffett, right? Not just his investment philosophy, but also himself as a person, how he's managed to stay simple despite having a very, very large asset under management. And, he is valued like significantly, right? But it's not changed him significantly, right? So I think these are things that we feel are applaudable and we like, especially for long term. We feel there are certain methodologies that are suitable for the masses, right, to be shared. Goodwhale Buddy is created. We have something called FinBrain, FinBrain is like, I guess it's a whale, right? So it's a fin, but actually it stands for finance. Okay. So we built a backend system to journey with a person through chatbots. So it's available on WhatsApp, Line for Taiwan, and Telegram. Telegram is where we do the most testing on, right? So yeah, just like talk to it normal. So like we have Malay users that talk to it in Bahasa. Just say like, oh, makan malam, and like, I don't know, man, Thai fan. Okay, that's Chinese. Like maybe like, I don't know, nasi lemak or something.
Yeah.
And just put 5. So it will track all these expenses, because one good use of large language models is categorization. It can understand context because it's self-attentioning, and then it can categorize for you. So you just talk to it normally and it will track your expenses. It's not expense tracking for expense tracking's sake, right? It's number one, forming a habit, right? Whereby you start understanding where your money is going. That's very important as a starting point, right? Because money is hard to earn, right? And then with that, slowly you graduate towards like carving out savings. Let's reduce your discretionary, right? Rather than say like target 10% return, right? Why not you just reduce your expense next month by 10%? That immediately helps, right? Rather than trying to get investment return, right?
Yeah.
Yeah. So understanding kind of like how do you manage your expenses versus your income. And then after you're able to cover your savings, right? How do you apportion it, depending on your culture and depending on your needs. Yeah. And then lastly, how do you grow that, right? So what are the vehicles? But by the time you talk about the growth part, right, actually the Goodwhale buddy is less about expense tracking really. Because I don't know about you guys, but like I have no aspiration to expense track for life. It sounds extremely mundane. So what's the point, right? Yeah. And ultimately community. There are people that are sharing ideas and crowd wisdom, and then like crowd news, right? When things first release, in fact now we hear on Twitter first, right? Rather than the news channels. Yeah. So the community is important. GWA, GWB, GWC.
Very interesting. Okay. So where does the app play into this actually?
It's separate. So the investing app is something that people specifically who are looking to invest in the academy, we would introduce the app as a tool that they can use. But yeah, it will be something that's very specific to investing.
I see. So in terms of your CPO role, it's not just the app, it's like
it's all
ABC
of it, right?
as well. And
Yeah.
just being there for the whole life cycle of
Yes.
how people spend their money.
Yeah. So going back to the first principles, right? If there is a product and service, right? Sometimes the combination now is like O2O, it's online and offline, and it's omni-channel in fact. So what would the user journey look like, and what are the user gains and the user pains that we need to be resolving and building, and then which product plays which role in that, and then again, it's working with our technical team to build out some of these products.
How have you scaled yourself up from previously founding members, market launcher, CEO, CFO, now CPO? How do you decide to end up in the product space?
My reflection is I think I'm kind of doing the same role actually because for most startup founders, right, you might be like co-founder and CEO, right? You could be the co-founder and COO, you could be the co-founder and CPO, but your core role is co-founder, right? So one day you just be co-founder, right? It's kind of like Alibaba, right? Maybe Jack Ma was the CEO, but now it's just chairman, right? Which is fine, because that founding role will always be his core role, right? Yeah. So regardless of the functional title, I'm primarily a co-founder. Depending on the team that I'm in, we each play a different role for the good of the team and for the good of the business. So it just happens that now
the co-founder basically means everything. You have to do anything and everything.
Right? Whenever there's a fire, just go and put it out.
Yeah. Why sign up for B-Corp pending at such an early stage? Shouldn't impact be kind of reserved for like larger companies?
I would say that impact should be for all companies, right? And it really depends how you define impact, right? The predominant view now is like ESG, right? So, but I still feel that a very nuanced view of like impact, right? You're just looking at it from an environment, like maybe a social and a governance layer. But if you look at impact as stakeholder, right? So rather than shareholder maximization, right, stakeholder maximization, then your stakeholders include your employees, right? It could include your shareholders, it could include the environment, it could include your suppliers and your suppliers, right? So that is like one worldview, right? Impact, I feel, should be a starting point for many companies. Specific for our team, right? One thing we realized that in the past, that when we created companies, we would come with a problem statement, right? And then a TAM, SAM, SOM, right? So, and the idea is that the size of the problem that you solve is the value of the company, or the value of the company is maybe a function of like the size of the problem you solve. But a lot of it is it's external, right? So you're looking at the market and you are identifying the size of the opportunity, right? And investors back that, right? Because they need to know that there is 50x in the opportunity itself, right? But if you look at Goodwill, right, we were created from within, right? What we really wanted to anchor on is what is our DNA, right? Who are we as people? What do we care about? We have an international team of educators and technologists that in our strategic kind of alignment meetings, right, our retreats, a lot of it was about how do I help the next person. It's not about skill. It's not about market domination, right? It's not about monopolizing through tech. Yeah. A lot of it is just like, we are this kind of people who this kind of value, and this is how we hope to pay bills, right? So I found it to be quite a precious thing because it's so different from other companies. Yeah, and I really wanted to anchor it, right? For the team to always remember that this is the DNA of the team. This is why we struggle, and this is why we come to work, and this is why we do what we do each day. And the best way to do it, right, is to get like a form of external accreditation to anchor it, that we are this kind of company. So the B-Corp, right, is for us. It's not for other people. Right? It's just for the team to always know. And when they share with other people, they are proud that we are a B-Corp company. And people ask them, what does that mean? And then you explain what it means, and you explain why you are a B-Corp company, why our teams.
Was it difficult to get the B-Corp?
Yeah, it was very difficult. Because
what kind of criteria do you have to?
There's like this whole test you have to go through, and then there's an audit. And the audit, they actually really dive into your contracts and to make sure what you're declaring, is verifiable. It is a lengthy process, but has a regional office in Singapore. So they have professionals to help guide you through this process. But ultimately, you have to hit a certain score for you to qualify as a B Corp company. So we've met that score, we've qualified, but our year of incorporation is less than 2 years. Yeah, so we have to hit until we hit that criteria, then we can become full-fledged.
I see. Maybe just moving into some frameworks. What have you learned about picking and joining ventures? Like, I think Tony Fadell has this idea of like spotting waves and catching them, or even like letting ideas chase you instead of, just trying to chase your own ideas. Maybe what's your own kind of view when you look at entering ventures?
I would say I'll go back to kind of like I'll pull the focus point away from the extrinsic towards the intrinsic. Yeah, I mean that's currently where I'm at. The key question is kind of like you don't have to be an entrepreneur to be entrepreneurial, right? In every circumstance, like be it like maybe in a big corporate or even in civil service, right? I mean, you can bear the entrepreneur spirit, which is like problem solving, right? Thinking nimble and being innovative with your solutions, right? Actually, that can be applied in many, many scenarios. So you can always be an entrepreneur. The entrepreneur is an occupation, right? Another thing is that, you don't have to pursue scale, right? You can create solutions. I mean, let's create like a WordPress plugin, right? And then sell it for $1 to 1 million people, right? That can be meaningful, right? Yeah, but do you really need to build a startup and create a company and then build a team and then be in charge of these people's rise bowls and their career progression, right? That's not for everyone. I would say that a lot of it is kind of down to the individual, right? What do you want for yourself as a lifestyle? Right, and be careful what you commit to. The overwhelming narrative now is about tech startups, and it looks a lot like fundraising announcements, right? Because that's kind of like what we've been seeing for the past 10 to 14 years. If we go back to first principles now, right? Like maybe for now, let's say if I were younger, maybe if I was like 30 to 35, right, on a 5-year timeline, right? What kind of lifestyle do I want? Right, then I'll start from there. So that will be one very important framework that I would debunk. Means like looking at the market opportunity, like chasing the market, right? Everyone can chase the market, but there can only be one Junxian, it can be one Eric, right? So I would still care a lot about what is Junxian's requirement, what's Eric's requirement, right? You will realize that your family starts coming in, right? And then you start thinking a little bit longer term, right? Because you're not building for the sake of exit, right? Or market, right? You're not building for other people, you're building for yourself. Right, and then that feels different. So yeah, I think specifically for entrepreneurs, it's important.
It's like really looking inward into your own personality and your ikigai, I think, as you were mentioning as well.
Yeah.
But and what you need in the future.
But it's easy for me to say,
what about like competition? Like a red ocean versus like a blue ocean.
I think those things should inform us, right, about how we operate and execute, right?
Yeah.
But if you're doing business, actually, you have to accept competition, right? You have to accept that there will always be 100 other similar businesses in the world doing similar things, likely similar worldview, but working harder and more aggressive than we are, right? So you just have to assume these things. So you have to accept competition as part and parcel of business. If not this year, next year. If not next year, the year after, right? So you have to accept that. But I feel that's also what makes it interesting, right? There's no point playing a soccer game against yourself, Yeah, I would accept competition as maybe a healthy part of a well-functioning kind of ecosystem, and then we have to compete, But the idea of competitor or comparable, right? Now I think maybe with a abundant worldview, I just see them as comparables, right? We don't have to compete, meaning that they don't have to lose so that I can win, right? But I need to provide enough value so my customers will choose me over them, right? So it's not about them, it's about me, right? And if they are charging $10 and based on my cost structure, I need to charge like $12, right? Maybe they are bigger and they are leaner, right? Then the question becomes that how do I deliver $20 of value so I can charge $12? Rather than how do I lower my costs or how do I lower my price so that I let the $10 guy be in trouble, right? So you know what I mean? It's
value-based kind of.
Yeah, so really just focusing on the customer and what more can I do for them? And maybe what that means is I cannot be a mass market solution, but I'm okay being a niche market solution. Yeah, as long as that math can check out. So competition, yes, but rather than competitors, I'll see them as comparable.
And they're all like creating value for the customer at the end of the day.
Yeah.
That's very interesting. Let's say I'm an aspiring entrepreneur. How will you go about starting a company in a financially viable and responsible way, right? I think there's this idea of just putting all your savings into businesses, right? But I guess how do you view putting your money into or bootstrapping or even raising funds if you were giving advice to an entrepreneur?
In today's maybe market situation, right? So important thing is that have you read Robert Kiyosaki's Rich Dad Poor Dad?
Yep.
Cash flow quadrant?
No.
So in cash flow quadrant, there's EBIS. The whole idea of entrepreneurship really is about creating efficiency in the economy, right? And I think that's important for entrepreneurs. Entrepreneurs are not called to take on unnecessary risk, right? But the efficient way for the world to work is that it's about creating kind of leverage, right, on each other. Some people have money, no time, right? Some people have time, no money, right? And therefore, these people should work together, right? So typically, entrepreneurs are people that we can partially finance the company, right? But there are a whole bunch of people that whatever they're doing, right, they cannot stop doing because it pays really well, right? But they have the ability to finance other people, so we should work together, right? So I feel entrepreneurs need to have that lens, right? This is the win-win, right? Yeah, it's not exploitative. It is win-win, but you need to raise from the right people, right? So, if I was a fresh grad, savings would be less, right? I would still look at maybe the earlier stages, right? Getting still some form of fundraising on the angel level or even on the government grants level, right? In Singapore, I think government is very supportive of this, right? So that, I can test. But my mindset, right, my suggestion to other people looking to kind of kickstart this journey is time bounded, right? Because when you don't time bound it, right, your family members are very stressed, right? Because they don't know whether, are you committing too much, for example, to it, right? And and where would this end, right? So if you time bound it, so for me, I'll think of projects, Goodwill included, on a 2-year time frame. The first year, every 6 months, so month 6 and then year 1, right? We will strategically all gather together and take stock, right? Do we still believe in this for 2 years, right? What do we need to change? And then year 1, same thing. So we are just past the year 1 mark. And I think whatever we have tested and exposed ourselves to in the past year, right, gives us the confidence that yes, we want to continue for the long term. Yeah. So if a new startup, right, if you raise from friends and families, right, time bound it, right? Maybe you have enough money for the first year because likely the first check will be lesser, right? But time bound it, and take stock at month 6 and year 1. Then decide whether you want to take a 2-year. But if you have let's say parents or maybe a spouse to be accountable to, tell them it will be 2, but it sounds a lot like 1 + 1. So that they also know that this is not a bottomless pit. And it also kind of helps you focus, right, whereby that okay, it's 1 year, right? Otherwise every other day you're thinking the meaning of life, right? Why am I doing this? Does this make sense? So the professional thing you do is secure X amount of it could be a combination of grants, savings, and some external investments, right? Then plan it accordingly, right? Give it 2 years. That would mean that maybe your cost per month, if you divide by 24 months, right? Or if you divide by 18 months, right? If you just want to call it a year and a half, you know how much you can spend each month, and you know how much you can draw, at which point you can draw, and then how you want to spend it. That one is all down to the business model already.
So it's really having enough runway for yourself as well, and then time bounding it for the company.
So being deliberate about it, so that you can focus. Otherwise, there'll be a lot of voices in your head, and all those voices are circular, right?
Yeah.
It doesn't get you anywhere. But what gets you somewhere is putting on your shoes and going to the gym, right? Like that helps. The action helps. So you need to give yourself 6 months of action. Then let's look at what it is and what it's not. 1 year of action, right? And focus what it is, what it's not, and just call it. Yeah.
You are a mentor to many startups. What's some common advice you've been giving, or like some common things you've been seeing?
I don't really see myself as a mentor, but I see myself as a peer because I'm kind of like experienced enough to give advice. But what I feel very comfortable is sharing my own experience. Right? So one sharing that I share with people, especially in this day and age, is regarding the role of fundraising. Yeah, specifically. I don't think there's a very strong role of this in scaling a company, but I still think the angel round is important to raise, right? Because that's how it starts, right? Especially for, if we are a fresh grad, then the initial startup capital has to come from somewhere, right? So that part of understanding a narrative enough to be able to convince people that this project is investable is still important. Yeah, but after that, right, not to build the business with the idea of Series A, Series B, Series C in mind until there's more clarity in that market. Really take this chance, right? Maybe get it off the ground, but focus deeply on product market fit. So your product service and your customers, and just iterate on that and create value so you can look to charge. Yeah. In the past, it was a lot about burning money, right? Let's start Grab Taxi and Grab Car so that, I have like 100 million users, and then any new business unit that I create is layered on 100 million users, right? So Grab Financial, for example, suddenly if each one of them pay me $1, $100 million, right? So it's not about your 10,000 of profit, right? Yeah, so that used to be very fundable, right? And a lot of people would fund that business model, but that's not the case today. So today, let's go back to basics, right? Until the next driver of economic exuberance is clear, right? Let's go back to basics: good product, good service, happy customers.
Yeah, really focus on product market fit and
and when the time comes and capital is available in a meaningful way again, right? Then let's scale that model, right? Let's copy paste that.
Yeah.
Right. That'll be something that I think that I've been suggesting to new startup entrepreneurs.
On that point, on focusing on the basics, I think there's been a shift towards like from B2C to B2B. Like B2B SaaS is like something very profitable now. Is there any sort of advice you give when building either B2B or B2C companies?
I do agree to a large extent that if we are going down the route of profitable, sustainable, and repeatable kind of revenues, then B2B makes the most sense. Also, as a young company, B2B, you have the most control. Because B2B is driven by a BD team, right? And a sales team, right? And then you can have a kind of a sales cycle, and that's more predictable. But B2C is different. B2C used to be ad spend, right? And then you optimize on performance marketing, right? A lot of it is about spending money to earn money. And then it's about ROAS, and then it's about lifetime value. So it's about losing money in the first 2 years so you can earn money in year 3 or 4 or 5, right? So that market is, I would say at the moment, a bit off. On the B2C front, right, consumers expect things to be free. That's the current market rate. It's free, right? But how can it be free, right? There are costs, right? It was free because someone is subsidizing it, and that someone would be investors, right? Right. And consumers are also more prone to switching. So I think like for stability wise, B2B makes a lot of sense. Okay. However, I mean, just to throw maybe one more lens on top of the question that you asked, right? Do you need B2B and B2C, right? The assumption is that you are a company, right? Because you are B, right? you are the B, right? So B2B or B2C. If you think of it just as 2B or 2C, you realize that you don't have to be a company. You can be just a solution, which actually your previous idea, right, could have been a solution rather than a company, right? You are a 2C solution and you charge for the solution, right? You can be a sole proprietorship, right? You can be like, I don't know, you can run as an individual, right? You can do freelance, right? I have some friends that are earning, let's just call it like hundreds of thousands of profits, right? And my suggestion to him was, let's not grow the team, because he's an digital nomad, right? He can travel around anytime, he can work off his laptop. Right?
It's a solopreneur life.
Isn't that? Then that's not so shabby also, right? And then you don't have to spend time kind of like on growing the business, which is your operational costs, right? Your office, that kind of thing. Things get complicated. So if you think of it as 2B and 2C rather than B2B, B2C, then you realize that you can actually focus on building automations and solutions. And you don't have to build company at the same time. Yeah, just build solutions.
Yeah. Now, you also have this philosophy of like be, do, and have.
Oh yeah.
Do you want to touch a bit more on how you gain I guess my question is how you gain clarity in making decisions.
Some of these frameworks actually, I mean, someone else like wiser shared it, and maybe I resonated with it, and therefore it formed kind of like a piece of the puzzle of my self-identity. Have, do, be, and be, do, have, right? In maybe a very capitalistic world, that one idea that is very prevalent in the market now is let's do a lot of work, let's work really, really hard, let's hustle, right? Yeah, so that I can acquire things, so I can have stuff, right? And if I have stuff, it will accomplish my ideal self, right? And my ideal self might be well respected, well loved, feared, I don't know, right? So there's that narrative there, right? And the focus, therefore, is a lot of focusing on do, right? Acquiring stuff. Yeah. But be, do, have is like, it's kind of a flip on that, right? Going back to the basics, which is like, who do you want to be ultimately, right? And, some exercises like if you had a funeral and someone was like saying your eulogy, right? Actually, what would that sound like, right? Because that's the end point. That's ultimately what you hope you are to the world upon leaving, right? So who you want to be, and who having clarity, right? And having intimate understanding of what that feels like and how that ultimately can play out, right, will lead to certain actions, right? So so the be will lead to the do, right? And the do, right, ultimately to the have, right? Because you've already aligned who you are to what you're doing, right? And that aligns to the outcomes that ultimately you will receive. The other one is aligned to just the action, right? Which might not be who you are. And that's when I think people have like midlife crisis and that kind of stuff, right? So,
do you attribute your success more to luck or to skill?
I mean, they each play a role, but I'm just thinking if we go one step back, right? Like, I don't consider myself successful, honestly, but I find that I'm very happy with my journey so far. I mean, it's been rewarding, so maybe in that case it's been successful, because like success is really a lens that's extrinsically given, right? So for example, right, like WeWork, I think maybe externally people would see it as a failure, right? Because the IPO and evaluation didn't go through. But Adam Newman as an individual, right, he's definitely pocketed like a hefty amount, right? And during WeWork's really glory days, right, he's helped transform a lot of things, right? The idea of work, even now, like you see, like established corporates, right, they all have like hot desking and they have like communal areas, and all of this was accelerated by WeWork, right? So I mean, I wouldn't be surprised if Adam Newman actually does not regret his decisions to really like expand WeWork so aggressively.
Do you feel like these skills come naturally, or you learn them?
I feel a lot of it's developed. Like in my earliest days, once again, I learned from very good people. I still have some of the decks that I built during those days, which maybe reminded me of my worldview then, and what maybe the same deck if I were to build now would be very different. So it shows that actually I have acquired skills along the way. Yeah, and now I would say I have far better chance of making the company survive for a longer period of time. I don't know what success means, right? But however long the company, 10 years, 8 years, 20 years, I don't know. But I have a far better chance of making it work out than I did last time, just by looking at the projections and the decks that I built previously. So yeah, I do think skill helps with de-risking the chance of failure. But whether it'll be successful or not, I feel a lot of that is still circumstantial. When the circumstance presents itself, some people say yes, or some people say no. Some people take it, some people not. And sometimes it's whether you have the ability and skill to take it. So you just need to be prepared for it. But I feel like rather than focus on outcomes, right, I focus on actions. I know the best version of the work I need to do today with the best interests of my customers and the best interests of my colleagues. That one is consistent one. I hope that by doing these things and the actions being of good intention will lead me to success. But even if that doesn't happen, it shouldn't change my actions nor who I am.
All right, thanks so much for this. Let's move on to our rapid fire round of the podcast. So what's 2 or 3 books you've recommended most to other people?
Okay. So Lean Startup I find very good. Yeah. And then strangely, like I would recommend Detective Conan. I've come to appreciate the comics have played a very significant role in my life. Yeah, so and I like mysteries. I like to be able to solve things. Yeah, so okay, Not for everyone, but like, yeah, comics, right? Or Detective Conan is something I would recommend. The last one's like GTD. I mean, these are the 3 books that actually have had the most significant
Getting
impact in my
things done,
daily.
yeah.
But Dave Allen, right?
Yeah.
They've had the most impact on me. Sorry.
Nice.
Sorry about the second one.
Interesting.
I know it's unconventional.
I should check out Detective Conan. But
Yeah.
any
Murder mysteries.
Sorry, what's a film or show you enjoyed recently, or maybe a film or show you enjoy?
Okay, actually, like one of my favorite films is like The Godfather.
Oh,
Yeah, I had a period where I was intrigued by gangsters. So yeah, I mean it's still, I mean IMDb is still one of the top films, right? But yeah, so a lot of that is about loyalty, but unfortunately too much of it is about revenge. Oh, but maybe one that had the most impact on me, maybe as an operator and leader, is dude, what's it called? Is it called 10 Angry Men? Yeah, it's a 1960s show. Yeah, and I was exposed to it in university, management and organization. The lead actor is a guy called Henry Fonda. Yeah, so it's basically a jury, right? And then 10 different men, dynamics, right? One person, how one by one, right? He convinced each one of them, right? He exposed their biases because it's a jury, right? Trying to put someone to death, guilty or not guilty, right? Jury system. Yeah. Each individual was actually a different personality. Yeah, and in a very short form of time, if you go to YouTube, I think you can find it because it's the IP has expired. 10 Angry Men. Yeah, it helped me understand people very, very visually.
Oh,
yeah. So I would recommend that film.
interesting. What was your favorite meal?
Meal.
Cai
Tao Gui, the black one. Unfortunately, very unhealthy. Chili at the side, so I can choose.
Okay. And what's something that people often get wrong about you?
I'm introverted.
Oh,
Yeah, so actually, like, these conversations, I can only do one of these conversations every day.
thank you.
And then I have to go and veg out somewhere after that.
What do you wish more people asked you about?
My religion. Yeah, I think most people relate to me maybe as a startup operator. Yeah, and that conversation is, to me, like almost, I have a lot of it. Yeah, but I feel if people try to get to know me more as maybe a husband, a father of 2 children, and maybe like as a Christian, I might, like have different conversations. So yeah, that'd be something.
If you weren't running businesses, what kind of job do you think you would be in?
Probably food retail, F&B, and coffee. In my previous cafe, one of my greatest joys was on Saturdays. So we have an outlet on campus as well. Yeah, just like serving coffee and chit-chatting with the people.
What's a snapshot of your ordinary life that brings you joy?
It would be my everyday life now. Important thing, no peak hour. So it really going to office at 10. Leaving the office at 4:30 and then going back, doing like some chores and then preparing dinner, put my kids to bed and then continue to do my work. And I love doing the work. I still design logos, by the way. So yeah, to me that's really
logo.
No, yeah, exactly. It's really an ideal day for me.
Last question. What's something you're grateful for now?
Now I go home. I love my family. They love me. That's something that's important, and yeah, I appreciate.
That's nice. How can listeners find you and be helpful?
Oh yeah, I mean like LinkedIn would be a very good way because they can just like search and then we can connect. Yeah, and I'm very open to like meeting new people and having new conversations. I mean, without agenda, right? I feel the best friendships are formed when there's no agenda.
Nice. Thanks so much for speaking with me, Junxian.
Right.
Thank you so much for listening to the Sow and Scale podcast. I'm your host, Eric Tan. This episode was produced, edited, directed by me. And I hope you enjoyed this episode. Don't forget to subscribe, leave a comment, a like, and follow it in your favorite podcasting app. And you can also join our WhatsApp group where you can provide me with feedback and chat with like-minded individuals. Thank you once again and see you on the next episode.